Morning, guys. Ooh, boy. Did we have a gap down? Did we have a gap down? Well, it looks like we're finally seeing what we should be seeing. This mask that the debt has created is finally unveiling itself, and we're seeing what really is happening with our market, and that there's really no investors right now messing with this crap, right? You got China that's dealing with the real estate bubble, and you got the U.S. dealing with the credit bubble, and this is what the outcome from that happens. So where do we go from here? That's the question, right? Well, from the algorithm's perspective, it's going to be some major levels tested today. Major levels. And how we deal with those levels, it really depends on if the market wants to bounce really fast back from those levels. If they don't, oh boy, we might be in trouble. So yeah, it's going to be interesting today for sure. Is this a normal pullback, or is this like a beginning of a correction? So pretty nasty gap down for sure. So let's check out SPY, and let's see what our levels are going to be trying to test today. So Nessie, this range algorithm that I wrote is when it breaks range, it creates a new range levels, right? So what we kind of see here is it's creating a new range through this 439, and the lowest is 435 zone. Okay. Now you can see that if it can't keep a range, it'll keep breaking down, right? The momentum of the downtrend is still strong. So that's kind of what I'm looking at right now. Well, one thing that you can gauge off that, if you're getting into a situation where it is getting oversold but it's still in a downtrend, where's the line at? Right? This line right here rendered, but it didn't catch this buy. This could just be a new area for resistance, right? So my new area for resistance off this line here is 436.65. Okay, so we got to get above 436.65 to be bullish again. All right, so that's what's critical when you're paying attention to the line, how it renders, right? So if you remember, like when it catches the bounce and it starts climbing up, then we look at the previous lines back here, and this is kind of like a little short lesson for you guys using the algorithms, but we look at the previous lines or whatever we can find that's closest to our next level, which was 444, right? That's when SPY hit 444 and it started breaking down. So, but because it didn't catch this price, right? It didn't catch the bounce. Now we use it as a resistance. So that's kind of what we're looking at right now. Okay. And this thing could drop even more as the video goes on. But let's just take a look on the bands and see where this thing needs to go. So we're going to bring up our trusty bands here. These are looking at deviated levels that might entice some buyers today. Okay. So, because again, all we've been seeing is this robot trading, right? It's just been, there hasn't been real trading going on in the market for a while. Okay. So, we're looking to see if the real traders are going to come out of the woodworks and see if we can start getting some real buybacks. Okay. This area right here is critical, 430, 429. You can see if it breaks below that, the next level down is 403. Now, if we go to a higher time frame, say a daily, you can see it's already broke down below the 437, right? That 436 range. You can see that it was climbing through on this deviation, and then it broke past. It just couldn't hold that momentum anymore, and it started going down. Okay, so this is where things get a little interesting. We're teasing the VWAP. All right, so we've hit this level before. Maybe not this price, but we've hit it before, right? This similar pattern. So what I'm talking about is these guys right here, these little buybacks. That's what I'm looking at today to see if there's going to be a buyback, right? If that happens, then the real question is, are the buyers going to try to go for new highs, or are they just trying to get out of their positions, right, this morning? That's what I'm looking at. If it breaks, though, that 430, that's when we get into real choppy waters through here. But the real main level, guys, literally is about 423. 420, 423 range. If it breaks that, that's when we see a massive drop, right? All the way back to 370. Okay. So just let's look. Those levels are pretty critical. We're in the green, right? So 80% chance. This is where the fear is, though, right? So if people are afraid to play right now, they're not going to get into this yet. We got to hold those emotions down and just look at the logical part, right? And if this thing starts rolling, meaning it starts wanting to go back up again, we got to pay attention to it. So 80% rule, guys. 434. If it breaks below that, next level would be 431 and at 430. 430 needs to hold today. Okay, let's take a look at VIX. You know, VIX, those people are pretty happy that hedged against SPY, which is a pretty good strategy, especially lately. So we see resistance here at that $30 range. Okay, about, what's the 29.30, but it's pretty close. So then it will start getting a momentum uptrend if it breaks the $30 range, right? If it breaks that, that's when we're going to see a bigger correction happen with SPY or with the markets in general. So those are kind of some key levels I'm looking at and how this thing's going to react today. Yeah, $31, something around there. If it breaks above that, VIX can go up to $50. So this is a real true test that we're getting here. Just looking at these levels that it's happened before. Super important to pay attention to the market today. If you're a buyer or seller, super important regardless. So looking at if it's even having a resistance, so we can see that the Nessie drew a line at 28.52. So now again, just like that support was all the way down for SPY, or the resistance that the line drew, is this the new support? That's the real question, right? And if it is, okay, then we have to negotiate, how high is this one to climb? Is it really going to go to $50? Or is it going to get up to like 32 and start going back down? So it really depends on how the market's going to react this morning. And we have, about similar levels, that 28. So I would say if we break below 28 for VIX, 28.51, 28.50, then we might see that SPY trying to come back up, right? So, man, I haven't even looked at the market, other tickers, because when I saw that gap down this morning, I didn't really think there was a need to. And honestly, I think it's safer for us to kind of wait and see what's going to happen instead of getting into positions, because we'll have time to get in positions. We will, especially with that kind of reaction that's going to happen this morning when the bell opens. We'll have time to get into positions. So right now it's just it's kind of like a waiting period. So this is going to be a shorter video. Let's take a look at Bitcoin, though. Bitcoin also reacted to it, right? So we're just all in all just getting a little sell-off. And I'm not surprised, honestly. But see, where is Bitcoin going, right? Because these two have been following each other intrinsically, right? They've been kind of interweaving with each other. I'm talking about the stock market and Bitcoin, right? They've been one level, like they get to like 450 for SPY, right? But if you take the 4 away, that would be 50, right? Well, if you take the same thing with Bitcoin, it's 50,000, right? It got up to 50,000. Then it started going back down. Then Bitcoin tested 44,000, right? 43,000. SPY got to 44,000 or 444, and it was started testing that. So this is where now the is Bitcoin going to go down to 439, right? Like if I'm sorry, 39,000. And it's SPY, because SPY went lower. So I wouldn't trust buying Bitcoin right now either. And big critical level for it is 42,000. But I still see 39,000 in the books for Bitcoin. So really important to watch the markets today. Like I said, 36, maybe a turnaround for Bitcoin. Maybe it'll start bouncing back up and we'll start creating new highs. You know, we'll see. We'll see if money wants to play. There's a lot of negative things going on with our economy right now, right? It seems like everything's just going back to normal, but it's not, right? It really isn't. There's a lot of companies that are still struggling to get employees. There's a lot of private businesses that are out of business, right? Because they can't keep the doors open because they can't pay the bills. And everybody's being affected by this right now. And honestly, in wintertime, if this virus gets even stronger and stronger, and they could possibly do another lockdown. I'm just, I like to throw those projections out to you guys just to prepare you a little bit, right? Stay light, nimble with your money, meaning don't go heavy into like buying a whole bunch of materials or things, just hold on to it. Just hold on and put it in stuff that's going to move better for you, right? I think crypto might move better if the stock market does go into this bearish correction. So it might be a better play. Just try to find ways that's going to make you money. That's really the biggest thing. I want to check out the meme stock though, just because we're here, just to see if there's any reaction. It hasn't really held. It didn't drop that significant, right? Some of these stocks didn't drop that significant. So, and it actually is showing a buy too on the NSE. So AMC might be an interesting play this morning. Just saying. Let's check out on our long-term hold. Yeah, it's not doing bad. You take those times to capture the best entries that you can, and you don't have to worry about the bigger drops, right? People who bought Corsair at like 29, because people, oh yeah, Corsair is going to keep going up. I'm sure it is, right? But just knowing that I bought it at like 25 just makes me not have to, think about it too much, right? Less thinking about your exits or your positions, the better. And that's what's important. And I was having a conversation with the group, and basically we were talking about, the success rate for traders. Like, what is it? Where is it? And some people are saying, yeah, I mean, there is success, right? Like, you can make money in this market. You could be profitable, and you can do big things. You can make a whole bunch of money per month day trading. Okay, but let me just, statistics, guys. Statistics. They don't lie. They never have. So when you look at statistics, the facts, right? I'm not looking at the current year or even years. I'm talking about say a 5-year span or 10-year span, your success probability for just day trading is 0. You're either going to break even, right, with the capital that you came in with, or you're going to be under. That's statistics. So keep that in mind, that when you're trading, right, you're literally trying to pay back what you lost, right? Say you came in and you messed up on your entries and you lost money, right? And then the next time you won, so you're up. Then the next time you lose and you're down. Next time you won, you're up and you're over that you were previous, right? So you're higher now. But then you lose again, but now you're like back to even. Do you see what's going on, right? That weird fluctuation that's happening, that's all calculated. So it's better to just, when you're up, right, start adding positions into healthier stocks and use that as an investment tool, okay? Or add some stuff in the crypto, right? Not a lot, but just so you're moving your money, moving your wealth. Don't get stuck in the casino. Don't get stuck just playing the slot machines or going to the big dealers and stuff when you have a whole bunch of money, right? Because people, when they first start trading, they're it's like slot machines, right? You know what I mean? Like you going in there with like $100 and you just, willing and dealing with the slot machine. You hit it, you don't hit it, and then you're gone, right? Or you're up more and you take that position and then you go into bigger trades. Now you in the big poker tables, right? The big guys. And you get burned immediately, right? And you lose that money. Now you're back to playing slots again. And it's just this nasty circle of emotions and how the money tolerance is not there, right? The value of the money tolerance is not there. So you just have to keep those things in mind when you're trading. If you're trading to just be like, like for me, right? I don't go like super heavy in position sometimes unless it's a bull market. If it's a bull market and I know there's a lot of momentum going on, then yeah, we're going to play a little heavier on our contracts because we know that it's going to be a possible big payday. But sometimes I'm even looking to just pay for lunch, right? Maybe I'm just looking for $20 for the day. What? Surprise. But to me, that was money I didn't have before. But if I get out of an entry and I made $20 or $30, that's lunch money for me, right? If you have that mentality, you won't be so emotional into this market. And you can really start diving and understanding and learning and unplugging yourself from this matrix of finance. So, and once you do that, you start realizing how much people really lose money in this stuff. When you just start, right, brand new, fresh as a trader, you have no clue what you're doing, right? Sometimes you'll just sit on the sidelines and watch other people. Other times you'll get lured into doing courses and stuff, right? There'll be someone selling a course and, say, oh yeah, it's, this is the best thing ever. And I mean, like you're going to learn so much and your percentage gains are going to go up, right? For only $5,000, you can get into this course, right? People actually will pay that $5,000 because they see, what they want from someone else, right? So when they pay that $5,000 and they get into the course material and they find out that some of this stuff seems like, after they've been training for a little bit, like, wow, I could have, learned most of this for free, right? Even though it's all compiled in one spot, I could have still done my own homework and got all this information for free. But if you went to that person and say, hey, is that course good? They're going to tell you yes. Why? Because they have to validate a reason why they just spent $5,000 on a course. So the point I'm getting at is you have new traders that come in they get into course programs, right? And they spent all this money, and sometimes they'll use that course information and then they'll make their own, server or social media setup platform from the stuff that they learn. They'll start selling that course, and it's like this vicious, weird circle that day traders and retailers. I don't know how you specify people. People don't have a lot of freaking money. How about that? They don't have a lot of money. You're income workers, so you're in this vicious cycle of just giving money to someone else, and then they lose their money, and they give their money, and blah 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 blah. Right? It just keeps going round and round. The best thing you can do, right, and just take this as a grain of salt or whatever, is do your own homework. Do your own homework. Learn about how finances work. Learn about the economics. Learn about micro markets, right? The smaller companies that make the bigger companies move. There is homework to this. That's why an intern at Goldman Sachs works 15 to 16 hours a day. Like, he's happy if he gets home at 10 or 11 o'clock at night, right? So that's the kind of research that goes into this stuff, okay? Where the real analysts are working in through the nights to try to make money for their company, for their firm. So why would it be so easy for us? Well, there's opportunities, right? It's the slot machine or the dealers that come, and you can make that little easy money. The problem is, though, statistically, that you are not going to leave that casino. So didn't mean to go into this large rant with it, but it's important, guys, that you want to do your own homework. Buy a decent tool product, and not to throw a sales pitch, but the Omni Algos is a fantastic product, right? Regardless if you like me or you don't like me on the server, because I can be very opinionated, and I will be extremely opinionated, because sometimes I treat people like kids when it comes to learning something that they don't know, and I don't want them to get hurt, right? You don't want to see your kid, fall off a swing if you can prevent it. So, it's a little caring part, and it's also a business part. Because if you guys are losing money, then you guys are going to, unsubscribe to the tools that we provide, right? So, I'm just going to stay on the sidelines today. I'll try to post updates of if we're holding a certain level that maybe we'll hold, and we might see a nice bounce, or we might be going back into the 300s for SPY. But it is Monday, right? So we got a long week. If you enjoyed this video, right, even the rant or whatever, and I didn't forget about that series. I just got super busy this weekend, but I haven't forgot about it, and we'll see. We'll see if anybody makes some mistakes in their trades, and we can critique it in the video. So you guys have a good day, and I'll see you on Wednesday. Make sure you like, share, and subscribe. Just push the like. Doesn't matter if it's a dislike. Doesn't matter if it's a good like. The algorithms don't care, right? So it helps out. Helps the videos. It helps bring it out to other traders. They can see this before they spend $5,000 on some course. How about that? So you're helping other traders. How about that? All right, guys. Peace.